Hello everyone and welcome to TBR's webinar, Rise, Fall, or Be Acquired, Insights from TBR's Business Intelligence Software Vendor Benchmark. I'm Justin Sargent and I'm hosting today's session. TBR is seeing consolidation in the business intelligence market, such as the 2014 acquisitions of Jaspersoft by TIBCO and Actuate by OpenText. Expansion with HortonWorks IPO and Salesforce's introduction of Wave also point to consolidation in the market and show that as BI and analytics functionality become more integrated in business environments, vendors will continue to rise, fall, or be acquired. Before we begin the presentation today, there are a few housekeeping items I'd like to cover. First, we'll be recording today's session and posting it on our YouTube site, TBR channel. We encourage you to visit our channel to watch this presentation or any of the previous webinars we've recorded. Second, we'd like to hear your thoughts and opinions on the material we're presenting. Please send any questions to the Q&A function and we will address them at the end of the presentation. Third, we'll be sending out the slides and the recording of today's webinar to everyone registered for today's webcast within 24 hours of the conclusion of the presentation. You can also find the slides as well as our thought leadership pieces, other webinars, and commentaries on our SlideShare account at slideshare.net/TBR_market_insight. Now let me introduce the analyst presenting today. Geoff Woollacott is a principal analyst in TBR's software practice and oversees the syndicated research team for TBR for software and BI practice. Meaghan McGrath is a TBR analyst and is responsible for analyzing the software and cloud business of vendors. She's also the author of TBR's Business Intelligence Software Vendor Benchmark. And with that, let me hand this over to Geoff and Meaghan.
Thank you, Justin. The first thing from a housekeeping perspective is to give you a brief overview of the portfolio and where this plugs in. The BI, as we call it here, other people know it as big data and analytics. We use the term business intelligence because if you cannot turn it into actionable business outcomes or intelligence, having the data is, as Jen Hamill recently tweeted out, can be a data swamp rather than anything that you can work with. So that's the reason for the name BI from our perspective. And what you'll see here is the benchmarks. The first one on the left, the Business Intelligence Software Vendor Benchmark, that's what we're addressing today. We have a companion benchmark for professional services, which we believe is critical to adoption, at least at this stage of the business process. We believe it's going to be a strategy-led type of deployment in a broad-based fashion. So that dovetails those two. Then the market forecast, we're taking a look at the total addressable market forecast. I believe we're getting those to market in June. And then we have customer research tracks from the software side and from the professional services side. And we do field it in one fell swoop, but we have different tracks that come through on that. So that's the broader portfolio. Now the taxonomy that we're using today has been revised a little bit. We came out with it. We had BI applications and platforms has stayed the same. That is as we have defined it previously if you've looked at our research in the past. BI tools we have combined. We used to talk about advanced and basic tools, and increasingly as we see consolidation and bundling, we believe that was going to wind up being a distinction without a difference, so we put them together. Now, the one where we spent a lot of time trying to determine how to define it and track it is what we are now calling data management. In the past, we were trying to look at the BI-related piece of data warehousing, and that, again, as we look forward, not necessarily where we are today, but where we're headed, we do not see that distinction as being terribly relevant as we're looking at the massive transformation in database technology that is going to work its way through the end markets, going to in-memory from relational, and also incorporating the unique capabilities of the Hadoop distros in terms of unstructured data manipulation and convergence and integration in with your, from the systems of engagement or systems of interaction into the back office or system of records function. So that's where we did a lot of work for this iteration in revising our definition. And who's to say a year and a half from now, if the thing moves even faster, we may be back at it to redefine it. On the next slide that we have is a little bit more of the detail with what are the gazintas, what goes into those categories. So this gives you what is in the BI apps and platforms versus tools and the data management component. So with that, we'll get into the heart of the matter. First thing is what's the outlook? Now, what this shows you is approximate year-to-year growth across the landscape was down. It was flat about 0.3%. And then the approximate year-to-year growth across the covered vendors was up just a little bit. Now, why is that? If this is such a popular area, how come the revenue streams seem to be relatively stagnant for something that is gaining so much attention in the market? And there's several different things that we believe are at play here. But number one is underlying all these figures is also a broader market issue within software of the shift from license monetization of what you do over to subscription. We have benchmarks for infrastructure management and applications as well, where we're seeing these figures off the top of my head. I just reviewed the content on these yesterday, but I can't remember it exactly, but license revenue was dropping about 3 or 4 points, and subscription revenue is going up 40 to 50 points. So there's a massive transformation that's going on that keeps the overall size flat, but it's that shift in the monetization strategy. So that's one of the problems or challenges within this space. Second problem or challenge within the space is going to be the continued bundling of the sort of the niche application tools and utilities that hang off the core database that you're using or data platform that you're using for all of your analytics capabilities. And we know, underlying that will be how long is it going to take for the rip and replace from relational to in-memory? How many people will do it? Will it gain broad-based acceptance? We're just in the beginnings of that. That somewhat stalls massive deployments, and we'll get into a little bit as to what's going on with that. So the right-hand side of this slide also gives you our forecast of a compound annual growth rate, and we're running it because of all these different factors. We have it around 3 or 4 points. And one other piece to tie into why do we see it somewhat depressed a little bit is at least within our basket of companies, one of the major players, because it's a major data platform player, and SAP, reports out of Germany, and the shifts in currency are depressing some of the results that are coming out there because of the rise right now of the dollar against the other major global currencies. And we also have this, Meaghan, is there anything there? Okay. Well, let's move into the 3 core topics we want to get into in this piece. If you just jump right to the next slide, we'll go right in there. So the first thing we see kind of in the here and now is that the established multi-line vendors, these are the well-funded legacy individuals. It's the IBM, Oracle, SAP, Microsoft. I also put in parentheses here Pivotal because they're an interesting player from the unstructured Hadoop distro side and the creation of data lakes. But these are the big 4 that have a lot of working capital at their disposal, so they can help migrate and manage the shift from license to subscription. Yeah, an example, just having torn through their 10Ks, Oracle's gross margin on the license and maintenance is about 94%, yet on their past component, which they do report, is running at 45%. So they've got the money to be able to make these shifts depending on how fast it goes, and they also have the most at stake as the market share could very well shift when we go through this massive transformation from relational over to in-memory and how quickly people go. Now, they have much healthier margins. On the pure play side, the place to take a look in our belief is, one, how well are they managing the need for hypergrowth? They're coming out primarily with subscription-based modeling, which is a relatively nascent business model within the industry and certainly something that we're all taking a look at. So when we're evaluating them, we're looking at also where they're going is in the executive level expansion, and that goes into their business age or maturity. And now it's the time when you reach those certain growth thresholds, you have to bring somebody in from the outside who, quote unquote, has done it before. So we're starting to see them build out the managerial and marketing capabilities to try to gain traction against all the other competing, call it satellites, around these cores, which are indeed the core data platforms. So with that, let's hop in. So this is what we see here. So those ampersands that give you a general idea, the average revenue growth year to year. What this slide is giving you is the BI vendor segment revenue with a year-to-year growth, as we said, of about 0.3%, and we've got an average operating margin estimate in here of 20.7. But
Well,
This is Meaghan. Yeah, go ahead.
This is Meaghan. One thing to note in that average operating margin of about 20.7, we are excluding HortonWorks for this for 4Q14 because of a one-time hit that came from the Yahoo investment payout during their IPO in December, which actually ended up under their cost of goods sold. So it dropped their operating margin way down into 1,400%, and we thought that skewed the average a little bit too much to be included. So I just wanted to make sure that was noted as Geoff was going over the figures.
That's right. Thank you for keeping me honest here as we get through it. So what you see here are the core database players. They clearly have less sequential quarter-to-quarter growth. They have a larger install base, an end to work from. And then sort of the satellite, the fringe, I don't want to know, fringe is a bad word. The emerging players that are bolting on to these core platforms and providing the value-added services around analytics and the tools for manipulation that are required in order to make what is coming out of big data actionable to generate the business intelligence that's necessary. Is there anything you would add here?
So yeah, something we're seeing with these big traditional players, the Microsoft, the IBMs, the Oracles, the SAPs, is really they have the opportunity to leverage their existing scale and expertise, and they're really able to cross-sell and upsell their portfolios. Again, they have a much broader portfolio, so they have that existing customer base to either cross-sell or upsell their BI solutions into, whereas the data facts, the salience, the good data really have to go out and win every customer. So I think that's another contributing factor to their margins.
Mm-hmm.
So with that.
We had a question here with respect to Google. When I think of Google, I think of it's another extension they can provide to all the traffic. They had a very unique business model in the sense early on, it was selling the ads and essentially giving the operating system away for free, which is a tough thing for somebody like Microsoft to compete against when they used to be selling the operating system in volume, and now they've got to start giving it away, which they have started doing with the sub-7-inch devices. So from that, they have a lot of unstructured data that they can sell out or sell as a time-shared piece into any analytics activities that other vendors or other customers may be trying to do with respect to marketing analytics. Is there anything you would add to that question?
And so specifically the products that we recognize here are the BigQuery and the Google Analytics Premium offerings. They do not charge for their sort of what we call lower level analytics offering, but they do charge for the premium version. I just wanted to highlight that.
Sure. Moving to the next slide. So in this piece, it's a specialized application tools and application and tools vendors. What we're getting at here, this is a relatively new space for me after years as a custom consultant, and the title I took was Software and BI, and I was much more focused on the BI space because within our industry, the transformation we're under is as profound a transformation as I believe I've seen since being in the industry since 1982 and having been mentored by an individual about what had happened with mainframes. And it's all driven by analytics and the speed at which we can extract business intelligence. So the competitive advantage is increasingly shortened based on the speed by which other people can innovate and extract business value out of what's going on. So within that, within the applications and tools, what I envision or what I'm expecting to see as we peer around the corner is very much what happened with the word processing, Excel spreadsheets, and presentation graphics until such time as Office came up as a bundle. So we envision more and more bundles being picked up. So the tool vendors either need to keep innovating or they'll wind up being acquired by one of the larger vendors, or they'll just die away as the next best thing comes up. So that's the point we're trying to make in this second pace around innovation. We're still very early on in this game. So when we look at this, and you look at what's going on, now here's an example down in the sort of lower right where we're looking at Teradata. they have picked up 6 different firms in CY14. Now, they have been around a long time in the analytics space, but with what I'll call legacy technology. And then you've got all these new and emerging platforms that are coming in, and it calls into question the need for that pure play. It was like Tandem is fault tolerant, and then, you know, they sort of evaporated from the scene about 20, 25 years ago as that became easier to bake into things. In the upper left, still in sort of negative margins, you have Dell Software, who has acquired a lot of different pieces over the period of time.
And
Meaghan?
yeah, Geoff, most recently, we see them up in sort of the 150% growth there right now, because there's still the unfair compares of the StatSoft acquisition, which happened in 1Q14. So there is a little bit of inorganic growth in their numbers right now.
Right. And then you see down in the lower left there where we say Microsoft is betting on Azure Analytics. They launched that in May or March, right?
March, correct. Well,
Azure Stream Analytics. So they're baking that in as well. They're coming at it from a slightly different vantage point from Oracle, SAP, and IBM within that space. But they clearly are somebody to watch here, and they certainly will be around when the dust settles on where we are in this evolving space as it is today.
Yeah.
So moving on to the next slide. So in-memory database market adoption is challenging the add-on tools, particularly around relational database technology. This is really the big fundamental shift. And this is the one that is going to take the longest of its time to work through the install base. And there's several different attack plans and strategies that we're seeing emerging from the major players such as SAP, Oracle, and IBM. Oracle clearly is looking at 12c, SAP has HANA, and IBM is building the foundation around Watson. And all three of these folks, as they're working that through, large enterprises, not necessarily from the research we've done on the customer studies and some other custom research that we've done, it's not going to be a rapid transformation over. There's going to be need for proof of concept. So there's a whole series of strategies that they're using kind of to go on offense, to build a ring fence around their existing install base, on defense, and then to go out on offense to try to pick off some of their competitor customers on these things. And that's going to work its way out over the next 3 or 4 years. This isn't going to happen overnight. This is going to take some time. So if we can get into the graphic slide. So what we see is they're waiting on the in-memory fraction. There's all the big players as we know them. Pivotal is out there, as I'm calling it, the unstructured data testbed. I think they're one to watch. They have the alliance with GE. GE, as we all know, will be going big into the Internet of Things. They'll need that unstructured database or data lake, as Pivotal likes to call it, for ingesting all these data streams and then compressing it and mining it to determine what they need to extract that's actionable. I can't remember what vendor briefing I was at, but the statement they made is that 80% of your transactional data is used within business and about 5% of your unstructured data is. So there's that need for the lake that then bolts in to the new transformations of in-memory databases, primarily as a way to merge the systems of record onto one database for real-time analytics. But you also need to marry it into the unstructured data sets for the systems of engagement and the marketing analytics and all those new customer experience components, where I just came back from an SAP CRM conference where, say, Hybris Marketing Cloud is critical in that space. Now, if you look over in the lower left, there you see Informatica and Teradata, where they're going to need to reinvent and transform how they go to market, as well as add in new technologies. It's probably one of the reasons why Informatica has just announced that they, like Dell, is going to go private. It gets them out of the eye of Wall Street as they work through what it is they believe they have to get done to kind of restart their market performance against some very well-heeled players who are able to embed analytics capabilities within the core databases of record, as well as migrate it into the databases for interaction. Is there anything you would add here, Meaghan?
No, I think you hit on it. I think the most important part we wanted to note was that we really thought that this is why Informatica went private, was was so that they could pivot without without having to answer to the Wall Street investor expectations.
So these next two slides that are coming up, and Meaghan will take most of the discussion here, is an intersection of their sales and marketing expense and their R&D expense. So with the average within the benchmark for sales and marketing spend was 24 points and R&D spend was 14. So that intersect is those two lines. The dot is where they were, the arrow is where they're headed. And Meaghan, is there anything you would add or want to go here?
So Geoff and I agree that these are some of our favorite graphs to look at because they're really interesting. As he mentioned, the circles are sort of where they were 6 months ago, and the arrows are the direction they're headed into at least their 4Q14 investments. And you'll notice that this graph is just the enterprise software vendors. The next graph will be the pure plays. But on this graph, it's really evident that a lot of the enterprise software vendors are either hovering at or below the, especially the average sales and marketing as a percentage of revenue line. And we think that's because, as I said on a previous slide, they're really able to monetize their scale and sort of upsell and cross-sell their portfolio, so it doesn't take as large a percentage of revenue invested in sales and marketing. As opposed to the pure play vendors, as you'll see on this slide, they're really investing ahead of growth. They need to go out and win every customer so they're all, as you can see, clustered above the average lines. And then looking at the directions of the arrows, two things to note are in sort of the lower mid left-hand side of the circle, you'll see MicroStrategy and Burst. So their arrows are going in the same direction, but there is a little bit of backstory that needs to be put there. MicroStrategy is they're declining because they're essentially, as Geoff and I put it, tanking. They just went through a large restructuring process where they cut about 700 employees. So that's why they're seeing smaller expenses as a percentage of revenue. It's not really a great thing right now, but they're trying to work through it. Whereas Burst is a company that's really accelerating their revenue. So their expenses are staying relatively even, but as a percentage of revenue, they're declining. So that's why they're headed back down.
Right. One was scale and one was sort of structural challenges.
Yeah, exactly. All right. Did you want to add anything else to this, Geoff?
No, I think we're good. I would get into the predictions because we do have quite a bit that's going on there. We weren't sure where to put this. We seem to be halfway through it and almost to the end, but there's a couple of monologues that might start flowing out at this point in time. Because on the multi-line firms, what I've been seeing as I've been attending the events and listening to the analysts, the Wall Street earnings calls, particularly from SAP and Oracle, and then from the major market moves that IBM is doing, we're seeing sort of, they're running the same playbook, and it's to defend the installed base. So what we have here is where, and this came out from the SAP CRM conference, it was a customer panel, talking about the CEC suite, which is sales, marketing, service, and commerce. And it's primarily coming out of the Hybris acquisition. But all customers said as they went and they deployed one of the cloud modules that is running under, with the base technology underneath it being S/4HANA, one of the key decisions for doing that was because their existing back office structure was on SAP technology. So therefore, for the integration into the core legacy investment that they wouldn't have to rip and replace immediately, this made the most sense. So when you think of this, in the old days when you sold licensed software, the joke was it was shelfware. Now it's broken into modules, where CRM is defined by one of the research houses as having 13 different discrete modules, and SAP claims they compete within 12 of those 13, where Salesforce has a smaller bundle. So the idea here is you can maintain your existing accounts, you can give them a moderate proof of concept or a moderate expense to be able to generate the proof of concept to determine that, yes, we do want to go forward with all the transformation that's associated with moving to an in-memory database platform. This is the reason, as I said at the top of the discussion, why we believe BI professional services is so strategic right now, is because from our customer research, one of the interesting findings we've had is for those who did indeed go through the transformation and move to an in-memory data platform. The customers were telling us that the benefits they gained once they were through that exceeded their expectations. Now, I've been around long enough, but I don't often hear from a major data transformation people coming out of it saying it went better or the output that they now get is better than what they expected. So there's a lot of advisory consulting, strategic business change management consulting that really needs to come to fruition for these test cases to be successful. So on the one hand, that's defense, right? We've got to give them an incremental way, crawl, walk, run, to explore and see the benefits of what can happen with an in-memory database that can do real-time analytics and merge systems of engagement with systems of record. The second thing is you need to stitch it out into, well, Oracle is doing the same thing, I should add, where they have those pieces that are going out, and they're going out to attack Salesforce directly, Workforce directly, while they wait for 12c activations of either in-memory or multi-tenancy to start dragging that. It's why we believe, as Oracle has stated, that their past revenue, which is in the triple-digit growth, is it 100? It's 100.
It was 200% bookings growth in the last quarter, but that's also, I mean, it's a new product,
a small,
so it's a small base,
right.
Yeah.
So as rosy as Larry Ellison can be when he's trying to promote something, what they came back with is that the past year-over-year revenue growth exceeded even their internal expectations on that piece. And we see that as also, this is where they can go to do the test bed exploration of concepts before they decide whether or not they're going to go whole hog and all in on 12c yet or wait on it. So those are some of, for the existing install, whether or not they want to get into it. Now, some of the unique things I believe that IBM is doing, there's a commentary I'll be putting out on IBM Health. It's in the editing cycle. When I get done with this, I'll finish it up. It should be posted to the web today. But that's very interesting in the sense that there's that very large investment that went into Watson, or as they've branded cognitive computing, that went on for years. I was there when they announced the first real commercialized concept of this in December of 11 around health. And now they've expanded it through several acquisitions, and I will apologize to say I can't remember them off the top of my head, but if you read my commentary by the end of the day, they'll all be there, where they're creating a business unit for health, Watson Health, which will take the core platform and extend it deeper into the industry requirements. So IBM was a leader in industry marketing. They've been doing it for decades. And it's now taking it almost down to the sub-industry level and driving it further and further into business relevance by stitching together both in-house or organic with inorganic assets to form Watson Health. As I said, they've picked up several acquisitions, one of which I describe as a community cloud for healthcare out of Cleveland. I apologize, I just can't remember the name off the top of my head. But this is a way in which they're extending these capabilities of the core platform and driving it into these micro verticals. And that really is the way that relevance is going to be maintained within IT. And it's also going to be the way in which end user IT really needs to start taking a look at whether they want to be in this business or if they're going to exit it and really become business advisors to their own company while they rely on these core platforms being delivered on Watson, on 12c, on S4HANA, through the cloud where you can configure to tailor to your business. But if you customize, which was the old on-premise SI mentality, you're going to lose the advantage of what they're slowly evolving to, which is a continuous upgrade cycle that comes out on the core cloud platform. And then if you want to use it on-prem, you can, but you've got to make sure that you're configuring, not customizing. And that sounds like a simple distinction, but it seems to be a very profound distinction, at least as well as a liberal arts major can understand technology. I'll catch my breath. That was all about multi-line firms. I said there was a monologue at the end of the event. The next piece is for the legacy and emerging pure play vendors. All these different specialty components of data warehousing, they are going to have to link into these new data management platforms. The relevance of that unique technological offer in the market is going to become harder and harder to market and convince end customers of, when in-memory database technology is going to be able to allow you to do it within your one version of the truth. This is what SAP calls the inside-out strategy of get the data right so that they will come at it from an inside-out strategy. So they're springboarding off HANA. IBM is springboarding off Watson. And Meaghan, do you have points there?
No, I think you hit on them. I mean, really, we're just going to see that the large multi-line firms they have the scale and the advantage and the existing products to move the market, and the pure play vendors are really going to have to be in a reactionary role, and they're going to have to pivot and differentiate while still being interoperable with the new data management platforms.
Right. When I go back into my historical memory, what I recall very succinctly, I had friends who were running software firms when this was going on, is they had to make the bet between Windows and IBM OS2 IBM OS2. Which operating system do we want to write to for the endpoint? Now that is, that's no longer a problem. We've got Android, iOS, and Windows as sort of the three platforms. We've solved that technological hurdle that was a huge, huge bet that had to go on. The bet today is which one of these core data platforms do we want to write to? Which ecosystem do we want to become a part of? So that's where you have the IBM Open Power Foundation. That is a very, very strategic move on their part. It's going to be interesting to see how that rolls through. And so these small specialty analytics vendors that are going to rise and fall, we're hearing about all these unicorns that are out there, are going to have to determine which platform do they bet on. And right now, that's the big four. That's Oracle, that's SAP, that's IBM, and that's Microsoft. And with that, we'll turn it open if there are any, you have something to add, sorry.
I did want to quickly sort of, to go back to the title of the presentation, Rise, Fall, or Be Acquired, I did want to sort of highlight what companies we see really moving with that. So we have seen Jaspersoft got acquired in 3Q14, Actuate got acquired just before the end of 4Q14, and then recently we've seen Pentaho get acquired by Hitachi, who we think this is really going to push Hitachi into the BI market in Japan, right, and sort of make it even that much harder for these other emerging vendors to get a foothold in the region. In the benchmark, we do talk about a little bit of the geopolitical influences on, or geographical adoption of BI. And we say that a lot of vendors are going to need to partner to get a foothold in the APAC market, and I think the acquisition of Pentaho by Hitachi is going to give them sort of that domestic presence. It's going to make it a little bit harder for the other vendors to get a foothold in the region. And then on the predictions line, I think at least my two predictions for the next year or two, I think we're going to see Burst become a public company. Their new CEO is very bullish on growing to be the next software giant. And I think the other kind of safe bet is Domo. Domo hired Bruce Felt in August as their CFO, and Bruce has previously taken both SuccessFactors and Qualix Group through their IPOs, and both companies have since been acquired. But he did say, and I forget who the interview was with, but it was basically put into question if his history taking companies through successful IPOs was a reason for him being hired as the CFO of Domo. And he pretty outright said, well, companies tend to favor those who have done it before. So I think that the IPO of Domo is one we're going to look out for over the next year or two.
And that actually brings in a good point. If you're seeking to track and understand what is happening with some of these emerging firms, it is critical to take a look at the bios of some of the senior management team they start to sprinkle in as they're growing in terms of what it is they think they need. And it could very well be you may not think they need what they've hired, and that could be a cultural disconnect. But the management team truly does have a far more profound impact on the smaller firms in terms of setting a vision or knowing how to navigate. And that all having been said, transformation we're under shifts so many of what were the conventional wisdoms that you needed to understand in order to navigate the business. But experience, I hate to say it given I have gray hair, but experience is less and less important because of how rapidly things are shifting. It is truly an amazing space. It's fun to watch. And with that, we will open it up for questions. Justin?
All right. So, yeah, if you have any questions, please send them to the Q&A function. First question we have is, why do you say BI will be a strategy-led transformation rather than a technology-led transformation?
Well, that goes, as I spoke a little bit about, what is happening is the power of what is available or what you can do for your business based on these new technologies that are open to bigger spaces of the market, because you're not constrained by how much hardware you can afford anymore given the shift over to cloud deployment, that you really truly need to sit back first and understand how you can integrate your business silos into one sort of concurrent flow of information to inform the business, engage the customer, and interact back and forth very seamlessly. And that is going to require a large sort of strategy play if you're going to truly exercise and leverage the value of what is capable there.
All right. Next question. If LLBs are pushing for analytic solutions, what does this do to IT control?
Well, that's an interesting point. We do customer research on the buying behavior, both for the software packages as well as for the professional services. And this is one of the things that's also under transformation, or you can say threat and attack, need to evolve, is how end customer IT departments are organized. I've heard of, at analyst events, there was a gentleman who sat next to me who told me that he was a sales rep within the internal IT department. So he was going out to the line of business managers and teams to sell against SaaS-delivered solutions to show that if you do it with us in-house, we'll be cheaper, we'll be better, we'll be more timely. So that the competition between SaaS vendors and internal, call it captive IT, is going to intensify. And within the analytics space, that's even more prevalent, particularly if you're running out to these data platforms that you're taking advantage of in a cloud subscription basis, and how well that integrates back into the core platforms that the internal IT shop is doing. So there's a sort of an erosion of what I'll call traditional IT maintenance functions. They're being automated more through analytics, among other things, as well as software-defined X, Y, and Z. So that's one influence on it. Another influence is certain law departments. I listened to a use case of an HR department that went through a major transformation, and before they did it, one of the first things they did was hire an IT employee to sit within HR to communicate and broker with the internal IT department, because they were somewhat skeptical of the true unbiased advice they were getting from internal IT. We heard it in some of the other transformations where the lines of business had to do it, because IT just did not have the skills associated with working in the cloud integration layer that's required in order to take advantage of some of these things. So the whole, as the industry is shifting how we monetize and deliver, so too are the end customers. So you've got two different moving targets. Vendors trying to say, how do we go to market, and end customers trying to say, how do we want to catch this and consume it? So the two plates are moving back and forth right now. It'll settle down, but right now it's about as volatile as I've seen it in a long, long time. Is there anything to add? All right.
All right. Next question. You talked about IPO targets. Who is going to get acquired?
That's a good question, and I think so. I go back and forth on this one. The one that I'm watching out for, probably not within the next year, but maybe the year after, is MicroStrategy. I mentioned that they went through the restructuring. They chopped about 400 jobs. Their revenue in 4Q was also down. So I'm going to have to check and see if this is a temporary downturn for them or if it's really sort of the beginning of the end. The reason I'm and back and forth on them being an acquisition target is they do have a very broad portfolio. So it's going to have to be a big player that acquires them, someone who has the money and the time, really the experts to integrate MicroStrategy's entire portfolio. It is very broad, so it's not just one point solution that can sort of be stitched into an existing platform. But it could be someone, I think, a larger firm who, just like Hitachi with Pentaho, is sort of acquiring to get their foot into the BI space rather than someone who's already there and just wants to expand.
All right. Well, I think that's all we have for questions. So thank you, Geoff and Meaghan, and thank you everyone for your questions. You can follow the Analyst as well as TBR on the Twitter handles listed on this page, and please check out our pages on SlideShare and YouTube as well. Additionally, before you sign off, we'd like to ask you to take a brief survey about today's presentation. Your feedback would be greatly appreciated. We'll leave the chat function open for another few minutes for people to ask last-minute questions. Otherwise, thank you for attending and have a great afternoon.